What's going on, guys? My name is Nicholas Merton here at Data Dash, and today is August 4th of 2017. So guys, as I make YouTube videos on cryptocurrencies, I've noticed one thing ever since the inception of my channel. A lot of people who view my channel, or those of you who are watching for the first time, are new investors in the cryptocurrency sphere. I mean, there's no doubt to it. This is a massively adopted market, and for its short lifespan, there's a lot of new people coming into the industry. Now, that being said, a lot of the videos I make are for those who are relatively experienced with cryptocurrencies, or at least have, walked around the block in the sense of understanding everything. However, I know a lot of you are new to the whole sphere of investing, and a lot of you might be worried on how to approach it, at least in a successful manner. Now, I'm not here today to throw you 1,000 different coins that you should go out and buy, nor do I do that in general. I usually do reviews on cryptocurrencies to cover the basics of them, but today I'm going to be doing a very generic, general topic that is very important, and that is learning how to trade cryptocurrencies. Now, you guys might, if you watch my channel, you might be knowing, Nick, you tell me not to trade, why you tell me to trade? What I mean by trading is not exactly trading cryptocurrencies in a short period of time. We're going to be thinking about long-term investing. However, not only do you use a little bit of trading strategy within investing, I'm going to teach you guys how to use technical analysis and the primary steps that you're going to need to know to really become a successful investor in cryptocurrencies. So you have to use some trading techniques as well. Investors do it themselves in other traditional markets like equities, meaning stocks. So I feel it's important for you guys to understand this. So anyways, guys, I've been pushing it off for too long. We're going to learn a lot in this video. I really hope you stick around, and I think it's a great video to get your feet wet into cryptocurrency. So let's jump right into it, guys. All right, so the big word here, everyone, is strategize. I'm going to tell you right now that the majority of people who invest in cryptocurrencies do not strategize. They don't understand why they're putting their money into certain coins, and they think that it's just going to be a get-rich-quick scheme. They think they got it in the bag. They've got, the profits are raking in. I don't sell you guys coins like that because I want you to do your own research and be confirmed that you're going to go out and find those coins that you know you're confident in. And I can show you guys all the steps to it. So we're going to go through it. I just want to make sure and emphasize, guys, strategy. Strategy is the big key word here, okay? So in the sense of strategizing, what are the main steps to making sure that you've got the right cryptocurrency for the long term? Now, of course, you guys can do this with multiple coins. I recommend diversification. However, I'm showing you all the basic steps to making sure you purchase the right coin and you went through the right steps to make sure it is the right purchase. So the first one is, of course, selecting a coin or token to look at. There's thousands available right now on exchanges across the globe. However, there's a very nice premier selection of, I would say, around 50 to 100 to invest in right now, with more ICOs coming out day by day. So you've got a huge variety to look into. The second step is, where's the price? Where's the price at? Is it cheap to us? Is it at, at all new highs, or is it at new lows for the 52-week? I mean, this is a really important factor, and we're going to get more into how we should really look at this and where we should think about buying. Step 3 is to check for chart patterns, guys. This is where we're going to get into the technical side of things and really start analyzing price action to benefit us in the sense of gaining valuable insights towards our future possible investments. Step 4 is to use the indicators. Now, guys, the indicators are extremely important. What's nice is that in crypto markets, seeing as it's relatively new, the very basic indicators, which I'll teach you about today, are very helpful in investing in cryptocurrencies. Whereas in other markets nowadays, you have to use very advanced forms of technical analysis to even keep up with how markets work. So it's definitely, it's very useful to use the basics in cryptocurrency. Like I said, we'll cover them a little bit later. And then we also want to talk on step 5 about forming price points. We got to learn about when we want to buy, if we're going to be buying a coin at a certain price, what's the price we're going to sell it at? What's our target price to sell, or what's our target price if things don't go our way? We're going to have a strategy for both approaches, whereas many people just think of the positive. And then the last one is follow through. Follow through, guys, and I'm going to emphasize that a lot at the end, but I think you can kind of get the general meaning of that. So anyways, guys, let's go ahead and jump right into it. So as stated before, step 1 is selecting your coin or token. So this is selecting the cryptocurrency that you're going to watch and are considering to buy. So how do you go about selecting your coin or token? Well, there's a few different things you want to keep in mind. There's 3 main categories of market valuation that really define cryptocurrencies. Now, a lot of you guys out there might think, Oh, okay. Well, this coin is 1 cent. I should go out and buy it. It's really cheap right now. It could go up to $200. That's highly unlikely because the actual dollar value per coin, or if even if it's just a few cents, doesn't matter in the grand scale of things. It's the market valuation. And how is that calculated? It's by the number of coins or tokens multiplied by its current price, and that's the overall valuation of that. For example, Bitcoin is very big. It's the largest cryptocurrency, and it's somewhere in the $40 billion range. So very highly valued, seeing as it was the first cryptocurrency and it's widely adopted and known across the world. So that would be an example, segueing into our topic of value types, that would be a perfect example for our large cap. Now, I consider, everyone's got their own definitions, but I personally would consider large caps to be the top 5 coins in valuation. So you can think of probably off the top of your head if you have a general knowledge of cryptocurrencies: Bitcoin, Litecoin, Dash, Ethereum, you name it. So those really well-developed coins that have good adoption and are continuing to grow. The second category is mid caps. Now, mid caps have, at least in my mind, over a $200 million valuation. This averts the risk of getting completely wrecked by whales, as they're called, the people who have the large volume of Bitcoin that can pump and dump certain cryptocurrencies. This gets you out of that risk zone, but also puts you in a more well-defined zone. These coins have pretty decent adoption. They're getting more media coverage. They're advancing on their tech. They usually have good teams. So definitely kind of medium level risk in the sense of investing. As you go down the list of valuation, you have higher risk. And that leads us to our higher risk candidates, which are small caps. Now, I recommend you guys do not invest in any small caps that are under $20 million in valuation, period, if you want my advice. The reason being is because down there, you are really susceptible to pump and dumpers or the whales, as I was telling you earlier. And we really want coins that are somewhere around probably the $50 to $200 million range if we're going to do small caps. So that's basically coins that are just coming onto the market, just getting out there. I know one that I'm very optimistic on is Mysterium. But they're usually very early stage coins that you could go out there and watch, maybe consider buying into early on. So the second question in selecting your token is, now that you've categorized what kind of risk factor you want in the sense of valuation, you've picked a coin maybe in large, mid, or small cap, you have to ask, why are you optimistic? This is a really fundamental question. This isn't so much technical, but why are you optimistic on this coin? Now, I listed out 4 major categories that you should always look for when you look at any given coin or token. The first one being target market. What is it aiming to be? For example, I have a few listed out. I have cloud storage, app development, finance, VPNs, and I can tell you some coins that go with those. For example, cloud storage. Sia coin is an example, which has a decentralized blockchain network where you can actually store your information on a multitude of hard drives across the globe, and you can pay people through Sia coin. So that's an example of knowing the target market of a certain coin. And there's tons of different target markets that these coins are going after, guys. So there's an abundance of opportunity, and blockchain technology is looking really optimistic in this sense. Second thing is, speaking of that, the technology. The philosophy might be great, the target market might be there. Is the tech there? Is the team actually making great technology that can not only be easily used, but easily downloadable, accessible, and brought to a wide scale? So is it actually out there and ready to use? The third thing is a solid dev team. Now, guys, this is something that has to be left up to interpretation, much like the other 2 factors that we've gone over. But this is something to really do your research on. You do not want to be investing in a coin that might have a great ambition and might say they're working on some technology, but only has 2 to 3 developers. That's not going to be enough to make a lot of the kind of claims that a lot of these coins are stating they're going to make. So make sure that there's a good experienced team. Make sure there's people who are backing those projects, and also make sure that they've got a decent amount of attempts at working with partners and reaching out and branching out with a lot of corporate industry partners as well. So the fourth one, kind of going into the topic of corporate partners, is growing adoption. Are people adopting this coin? Are people using it? This is probably the most extreme and important factor. Now, how do I know that? Because Bitcoin, which has very basic tech and hasn't seen any major updates since we just saw a SegWit, it's pretty basic. It's just a coin that transfers over the blockchain pretty much. However, it has been adopted. It was the first one there, and because of it, it gets a big piece of the cake. So adoption is extremely important in the sense of media coverage, people actually, setting demand for it, people using the technology in corporate settings. So there's a lot of ways to measure adoption, guys. But if you reach, the way I look at this, guys, you should not invest in any kind of coin or token that doesn't at least meet 3 of these 4 categories, okay? So you could have a great target market, great technology, and a solid team, but it might not have the adoption there. Or you might have, for example, I would say great target market, technology, and growing adoption, but they're looking to expand on their team. That's fine. So there's different kind of ways you can analyze it, but definitely 3 out of 4 of those categories, guys. It's extremely important to make sure that you've got that confidence backed in your coin and you know why you're wanting to buy it, rather than just buying into hype. All right, step 2, guys. Where's the price? This is a pretty important step, guys. We've got to make sure we know where the price is for a certain currency. So I'm going to give you guys a good example on how to approach general price action and really take a philosophy when you're investing in something. So, for example, I've got one of my favorite coins here, Stratus. I got a nice Bittrex chart laid out here. And this is a chart of Stratus when it was mooning like crazy. Now, I gotta ask you guys real quick, I mean, look at the pace of that thing. And look at the volume, the little bars that are under the candles on the chart. I mean, God, there's so much optimism going into this, guys. You think we should buy it? I mean, it looks good to me. I think we should get into it until, well, right afterwards it sold off all the way down to 100,000 Satoshis. See, guys, if we would have bought in there and bought into that optimism, it's what's known as chasing the highs. And that's not a good thing or a good way to trade or invest in any sense. You're going to get burnt. You're going to lose. And the reason why is because there is a time-tested statement that we should follow rather than chasing the highs. And that is, as generic as it is, buy low, sell high. And I gotta say, guys, in an early market such as cryptocurrencies, this is extremely true. Now, it's not always true. Sometimes a coin can sell off 80%, much like in a stock market where a stock could lose 80% of its value, and it will never go back up. That can happen sometimes, guys. But when you have nice, consistent coins that continue to uptrend, they have good tech, good team, and massive adoption, when you can get a 50% haircut, which we saw more than a 50% haircut from its highs here, pretty much 75% down from its highs, that is a good opportunity to buy, guys. And Stratus is actually, just ironically enough, it's exploding today, and it's one of the reasons I'm holding it. I like the coin. I believe in its tech. I believe in the team, and I believe that it's continuing to be adopted. And look at that. You could have made from the bottom up from 100,000 Satoshis, 100% return to where it is on that chart. But if you would have bought it at 400,000 Satoshis, you would be at a big loss, or you'd be holding some heavy bags on your shoulders waiting for it to get back up. So remember, buy low, sell high. It's really simple, but it's really important. So reiterating again, don't chase the hype, guys. And this is a Warren Buffett quote. I didn't type it out, and I don't mean to be generic, guys, but it is really serious. When you're investing in an early market like this, guys, you can have these simple philosophies and takes, and you will make a lot of money, guys. Be fearful when investors are greedy, and greedy when investors are fearful. Now, this is pretty much tailoring on the idea of, like, when people are getting out of their hand and prices are going too high, you might be in, cryptocurrencies. You should be saying, okay, when's the time I can get out of this? Because people are getting a little carried away. And when greedy investors are getting fearful and things start to go down, that's when you should start getting greedy. Start getting greedy when the prices are cheaper. And that's a great way to approach it. So this is another thing that you should ask too with the price. Do you believe it's worth more? Honestly, that's a decent question. Do you believe at the price that it's at right now, if you're going to buy into it, do you think that it can go higher over the future? Do you think that it's, do you think it's at a fair value right now? Or do you think that it's really undervalued and it's time to get in? So definitely take some of those points to home, guys. It's extremely important to be confident and say, yes, I'd be fine holding this for more than a year at this price because I think it's going to go up from here. So great way to look at it, guys. Really test yourself. Would you be willing to hold it for a year? That's a very important question. So step 3, I got a pretty cool picture here, guys. If you played Mass Effect, I had the elusive man foot. I thought that would fit really good. But check for patterns. Check for ways that you could strategize on your purchases. And we're going to go into some really cool technical patterns that you guys might not know about, but will really help you spot price action and learn opportunities where you can buy maybe cheaper or get in before something big happens. So what technical patterns are we going to be covering? We're going to be covering a mixture of categories and specific technical trends. And it's in 6 major categories. We have wedges, triangles, bottoms and tops. We've got the bull flag, head and shoulders, and cup and handle. And these are very important, very basic ways to use technical analysis, guys. And I've got visual examples for all of you, so you're not going to have to be bored by me just trying to sit here and visualize it like a philosopher. So let's go ahead and look at some of these, guys. So I've got a few examples up here. I got a few Bittrex charts. The first one I've got on the left to show you what a simple wedge is ants right there. And this is a perfect example, guys. I printed some good money today, over the past 2 days on ant shares because of this wedge that I spotted, where the price action basically has lower highs and higher lows, and it slowly starts to coil in a very, very clean kind of sideways triangle, wedging in and coiling the price action. And then what happens is it's either going to break up or it's going to break down. There's really no telling until it gets above it and really has a decent part of the breakout. And then you can get in and know, okay, this is a time to hold for the long term, because this is where all the bulls, their exuberance comes in and the price really gets propped up. So, however, wedges are really nice and they're pretty easy to spot. However, there's also things known as ascending wedges and descending wedges. So I've got an example for waves right here. And it's not the best ascending wedge, but basically speaking, it's when you have on the bottom the lows are rising, so they're going to a higher level, and then the highs of the candles are continuing to rise as well. However, it usually is moving at a slower pace than the lows are moving up, and it's showing that resistance keeps hitting it. So this is a bearish technical trend. So for those of you guys who don't know, I'm just going to explain real quick on a language basis. Bearish and bullish mean how you're feeling on the certain market, how you're feeling on the market at the moment. So if you're bullish, you're optimistic. You think things are going higher. You think things are undervalued right now, and you can see an uptrend coming soon. If you're bearish, you think, all right, cryptocurrencies way overvalued right now. I think they're going to go down. I think that they've been propped up too heavily on too little volume. I think it's time to sell. So that being said, an ascending wedge is a bearish. It is a bad signal for price action. We can obviously see that waves sold off pretty heavily. And then we have on the bottom a descending wedge. Now this is green. This is a bullish trend in price action, where the descending wedge is getting closer, and the highs of the candles are getting much lower, but at the same time that support level isn't decreasing as much, but it still at the same time is decreasing. So what happens is it coils in the price and then pops up out of it, as we saw with Zcash. So anyways, guys, that's a few good examples of wedges. Wedges are probably what you're going to be using more than anything. However, you guys also get to use triangles, and there's a little bit of a difference here. Now, you guys might say these look kind of similar. They look kind of like the wedges. Well, there's a big difference between the triangles and the wedges, and it's the roles are reversed. Sorry about that. That was kind of a tongue twister right there. But basically, in the sense of an ascending triangle, what you're seeing is lows from a stock price continuing to rise to higher levels, and then there's a consistent resistance level. So for example, we saw a stratus here, which eventually will lead hopefully to a breakout as the price continues to find that steady support upwards, and it keeps coiling against that resistance. So eventually it'll get to the peak, usually the peak corner of it, and shoot upwards. Now keep in mind, guys, it doesn't always work out that way, but usually in a sense, ascending triangles are a bullish sign. Next up, we've got Bitcoin right here, and a perfect example of a descending triangle. So we have the base support line at the level we saw on Bitcoin, and it kept on finding support there. However, it kept on getting resisted at lower levels, showing that there's some negativity in the price action. So eventually, it got to the peak or the end of the triangle, and it went through and it fell down to new lows around the 2000 area. So those are perfect examples of utilizing triangles in cryptocurrencies. Next up, guys, we've got both bottoms and tops, and today I'm going to be talking about double tops and double bottoms. And the thing is, guys, you can also see in multiple cases a triple bottom and a triple top as well, and they work the exact same way. It's just more price confirmation towards that trend. So I'll show you a perfect example, guys. If you guys know about voxels, this is a VR cryptocurrency. Voxels had a double top at the same price level, a little bit above a 3,000 satoshis, and it was a clear double top, guys. And you can just see it right there. It instantly started selling off heavily, much like it did in the past. So, perfect example of it, guys. And in the case of a double bottom, you're going to see double bottoms a lot when you're looking for buy points, guys. This is a very common bullish sign, and it's when the price action stops selling off at the same level and it bottoms out at that same price level. So usually has kind of a hilling effect, hits the same area, and then it shoots up, as we saw there with Digibyte. So perfect example of it, guys. And like I said, triple tops and triple bottoms work the exact same way. In fact, they're more like extra confirmation that that is either support or that's resistance. So keep that in mind. All right, guys. So next up, we've got a bull flag. This is a very common technical sign you'll see in normal traditional equities markets. But however, recently we had a really good example of an ICO, which is Omisco, that came out strong, came up with a strong candle, and then maintained the majority of its gains, and then continued to rally. This is what is known as a bull flag. And a bull flag is a confirmation that, look, we had a great day, we're slowly maintaining some of it, we're cutting back a little bit, we're being reasonable, we have to have a little bit of a pullback, it's healthy, but we're maintaining the majority of our gains, and then we're going to ascend to new highs. That's pretty much the philosophy behind a bull flag. Now, sometimes they can be a little bit rough, but it's usually where you have a big green candle and you have a little bit of selling off each and every day for about 2 to 3 days, let the market cool down, and then the optimism rushes back in when prices are a little bit lower. All right, guys, head and shoulders. Now, I couldn't find a really good example just in my spare time when I was working on the PowerPoint slide for this of a stock, or sorry, not stock, a cryptocurrency that showed a head and shoulders pattern. However, it works the exact same ways, guys. In this case, we have a chart of the euro to the USD in comparisons on Forex exchanges. So we can see, obviously, with the head and shoulder pattern, it's much like a literal head and shoulders. So you have the left shoulder of the price action that is found and maintains some support. It starts to go up towards the head, the peak of it, and then it comes back down, and it looks like it's going to try to get up there again and try and test the highs. However, it curves back down and forms a head and shoulder. And this is a very bearish sign, guys. You do not want to invest in something that shows a head and shoulder. That is meaning long-term downtrends for quite some time and a decent correction coming to the price action. The last one we're going to be covering, guys, is a cup and handle. Now, I knew instantly when I was thinking about a cup and handle what to cover, guys. There was no more clear of a cup and handle in any history of cryptocurrency other than Bitcoin after its first major run up and its pullback. What we could see here, guys, is basically, it's what it is. It's a cup, so you see the cupping price where it goes from its peak, it goes down, and it cups back up to those highs, and then it has a slight pullback, almost kind of like a handle on a teacup. So this is an extremely bullish sign, guys. If you see this on a chart, it usually means optimism is coming back into that asset. So if you see this on a cryptocurrency, guys, or if we see this again with Bitcoin, that's a huge opportunity. So next up, step 4, using the indicators, guys. As you can see on the back here, I've got a picture of Apple. I know, continuing to go back onto the stock market of things rather than cryptocurrencies, but everything applies the same, guys. You can see with the circles there, you can use these technical indicators to really help you. And I'm going to be covering about the basics that you need to know because, quite frankly, you don't have to use any advanced technical indicators in these markets, guys. There's a lot of simple indicators that you can use that people use in traditional markets that can really just give you a massive advantage that even some basic investors and traders don't use in cryptocurrencies. So the 3 I'm going to be covering today, guys, are the simple moving averages, the MACD, and the Bollinger Bands. And these are really important for you to understand and use. And what's nice is you can use them in pretty much any charting application. I know Bittrex allows it. I know TradingView allows it. So lots of opportunities out there to use these, guys. All right, so the first one is the simple moving average. Now, y'all know I'm very optimistic if you watch my channel about ant shares or NEO, and I definitely wanted to use this as an example because it was so clear. So not only did we have the wedge on ant shares, but we also can use what's known as the simple moving average, and we see that it lines up perfectly on the chart. Now, a lot of you might be wondering, Nick, what is a simple moving average? Basically speaking, on this chart right now, we're looking at the daily chart. So this means each candle you see on here is a day's worth of price action, okay? So we're seeing a few weeks of price action here on this chart. And when you're viewing the daily chart like this, where each candle is a day, the simple moving average is going to take a numerical value you give it. In this sense, we used the 50-day. And it's going to take the last 50 days of closed price action, meaning what the price closed at each of the 50 days. And it averages it out, the simple moving average. And it produces this really nice smooth line that usually goes up so long as an asset or cryptocurrency's price goes up over time. Now, if things start to downturn, the moving average will follow slowly behind it. And you can use this for a lot of different numerical values, guys. I prefer, if you're going to use it, use the 50-day, the 100-day, and the 200-day. And what's nice, too, is if you want to spot this trends on the weekly, if you're thinking really long-term, you can also just simply switch to the weekly chart, and it will adjust to the 50-week, the 100-week, and the 200-week. Now, those are really long time periods, especially for something so young as crypto, but maybe in the future you might use that for longer-term trends, or maybe for Bitcoin or one of the larger coins. So, next up, guys, we've got the MACD. So, as you can see, there's nothing specifically on the chart, but it's at the bottom. And the MACD is a really cool indicator to tell when bullish price action is on the horizon and when investors are starting to get positivity back into price. So, we can see that there's a red and a white line on this case. The colors will vary for you guys, so you have to set them accordingly. Basically speaking, though, if you really want a simple definition, and I know I have to get through this pretty quick, the white line is, once it starts crossing the red line upwards, pretty much passing the red line, it's shown as a sign of optimism, and it's definitely a bullish signal. Now, when the white line dips below the red line and it's peaked up, kind of like it was back in July on the chart, that is not a good sign. That means selling action is most likely coming. So, keep that in mind, guys. The MACD is very, very helpful. And the last thing I want to talk about is the Bollinger Bands. Now, what is the Bollinger Bands? And simplicity, for the sense of being simple by definition, it's basically the range of price action that should be at least a little more common. And if it steps outside the bands, you should know that the price action has probably been a little overextended. So, for example, we can look back to back in June when Ant shares was just skyrocketing, guys. You can just see the price action lifted up to incredible new highs at 500,000 satoshis. Just a few days being around 100,000 satoshis. So a huge lift up in price. However, we could see that it stepped out of the Bollinger Bands and quickly corrected back inside the bands because it was too fast. It was too quick, too fast. So, and what we can also see too is we can use this in less ridiculous price action. For example, we can see that the candle, the first circle we have on the screen around the red candle in July was where we found support through the bottom of the Bollinger Band. And we can also see we had resistance on the Bollinger Band on the other green candle where the wicks closed down, whereas it originally had been higher during the day. So we can definitely use it, guys, for price action, and it's a great way to tell when something's overextended or if something has been oversold. So, now that we've done all the technical stuff, guys, it's time to talk about step 5, and this is forming price levels. Now, this is, guys, I can't tell you, it's one of the last major steps, and it is extremely important. It is the final piece to strategizing on your investment. So, let's say, for example, guys, let's get funny here. Let's have a good time. Let's say we want to purchase $10,000 of Dogecoin. Okay, you know, a nice meme coin. If I had to pick a meme coin, it'd probably be Dogecoin. And we can see that Dogecoin has had a really nice pullback. It's had more than a 50% pullback. We're not buying at all-time highs. And hey, look at that. It's down at the 200-day, guys. A huge level of support for long-term pullbacks. So that's great. Everything is lining up here, guys. And I think, you know what? I'm going to be optimistic here. I think if we can get in at 60 sats or 60 satoshis, I think we could get this up to 120 and make a 100% return. I mean, it sounds ambitious, but look how quick it happened in the past. I think we could really get back up there again, and I don't think it would take too long. And I'm willing to make that investment and hold. I love the technology and everything, whatever. So we've gone through all of our evaluation processes, and now we're here, and we've set a plan to buy at 60 sats. So, basically speaking, we want to come in, rather than just thinking of the best case scenario of it going to 120 satoshis, we want to have a plan for that, sure, and I'm going to cover that. However, we want to have two plans because things can go both ways in markets. And in a lot of cases, sometimes things don't go our way. So, how does this look? I'm going to go ahead and go to this next slide. I zoomed in a little bit on the price action here, and we're going to talk about two different types of orders. There's what's known as a limit order and a stop limit order. So what is first and foremost a limit order? A limit order is what pretty much states in a verbal, kind of like a verbal contract. It says, I'm not going to be selling my Dogecoin until I reach 120 Satoshis per Dogecoin. All right, and that's the 100% return we were talking about, right? So that's a limit order. Now, you can always cancel it. It's not set in stone. You're not signing a contract, in that kind of sense. But it's pretty much telling to the market, look, I'm listing this up for 120 Satoshis. I'll wait till the market sees it fit that that's the value and someone wants to buy my coins off of me. So that's a limit order, and that's hopefully the case scenario we're hoping for. However, guys, things don't always go our way in markets. It's a fair assumption to make right off the bat. In most of the cases, this is going to be a very important step to limit losses and limit your risk profile. So let's say, as previously, we were buying at 60 Satoshis for each of our Dogecoin. Well, let's say, for example, we only want to, at max, lose 10% on this trade, okay? We have a potential to make 100% return, but at the same time, we don't want to, just keep holding it and then, oh, we're down 50%. We're going to limit our risk profile to 10% in losses. And we can do that with a stop limit order. So a stop limit order pretty much says when it reaches, if my Dogecoin reached this price, it is going to automatically sell. Now, guys, a lot of trading applications do not have stop limits set in. However, what you can do is you can set price alerts on your phone and actually go out and physically sell it once it reaches the price. So it works the same way. It might not be as quick and instant, but it's a good way to be disciplined, guys, and limit that risk profile, because so many people don't do that and they get burnt and have to hold huge bags of coins that they don't want to hold and wait, hopefully, like, God, I hope it goes up someday. So you don't want to get caught in that spot, guys. And if you make a 10% loss, let's say in this case scenario, guys, don't feel upset. Be satisfied knowing that, hey, I limited my risk to an area that I'm comfortable with, and you know what? I stayed disciplined. And guys, now that we've covered everything, that is the last point I'm gonna reiterate to you guys. Be disciplined, guys. I can't tell you. Let me tell you something real quick. Now that I've gotten all that stuff out of the way, the jargon of all I want to talk about in this video, guys, I really want to talk on a philosophical level here. You guys who are watching this video within a year or two from when it's coming out, I want to let you all know that you're in a market that is set to expand very far over a long period of time. You are early adopters, and you should be happy for that. I'm glad you're here on this channel. I'm glad you're here watching my videos, but I want to make sure that you guys don't get carried away. And the reason why is because just like in traditional markets, like stock markets, people get burnt when they think with emotion, when they chase highs, and they don't come in with strategy. I'll tell you, for example, I know a lot of people tell me they want to start trading rather than just simply investing. And the reason I tell you guys to invest is because in any given market, whether it be Forex, which is trading currencies, actual US dollar to Canadian dollars to the Chinese yuan, whatever it may be, just like stock markets as well, 90% of traders lose money. Let me repeat that. That is a fact. That has been proven throughout history. And that number is continuing to grow as well. 90% of traders lose their money. Okay? So when you're trading out there, guys, and you're not being disciplined and you're just tossing money at things, you're most likely going to be a part of that 90% and not the 10% who win. And if you are going to go out there and trade, guys, take this strategy, at least, with a grain of salt, and really try to, kind of form it into your own trading style. We all have our own ways of approaching it, guys. And my way isn't the golden approach. It's not the gold standard. However, be disciplined in whatever you do, guys. Make sure you come in with a strategy. Be that 10%, whether you're doing trading or long-term investing. Come in with a strategy and come out on top with the returns that you will eventually get and deserve for your hard work and dedication and your discipline. So, guys, I know I rambled on there for a few minutes, but I'm glad I got to cover all that. I've been meaning to do it for quite some time, but I'm happy you stayed with me, and I'm happy you watched it, and hopefully you gained some knowledge. So thank you guys so much for watching, and thank you for continuing to stick around my channel for those of you who are subscribers to my channel. If you guys haven't yet subscribed, I really would appreciate if you subscribe to the channel. I drop a lot of great content on certain coins that I cover, whether it be ICOs or coins that have been on the market for a while that are starting to trend, and I really like to get information out to you guys. Not to mention, I also do live streams and a ton of other ways that I can interact with you guys. So I hope you guys joined the Data Dash family. I hope you guys enjoyed this video. If you got something you want me to cover, please leave a comment down below. If you got any questions, I'd be happy to answer them as well. But anyways, guys, that's it for the video. Thank you all so much for watching, and I'll see you all in the next video. Stay tuned.